Hello everyone. This this video is going to cover the first part of demonstration problem 14.1, how to prepare a sales budget, a schedule of cash receipts, and the pro forma data that go along with a sales budget. So again, we're talking about that master budget. We start with the sales budget, and then we're going to figure out our schedule of cash receipts from that sales budget, and then which aspects go on these different pro forma statements. So we have Zhao Distributors, a wholesale company that is considering whether to open a new distribution center. So the center would open January 1, year one. And to make the decision, the planning committee requires a master budget for the center's first quarter of operations. So January, February, and March of that year. So we're going to start with part A. Our January sales are estimated to be 400,000, of which 100,000 will be cash and 300,000 will be credit. The company expects sales to grow 10% per month for the first few months of operation. So for this one, we need to prepare that sales budget for the first quarter. Again, we're starting with our sales budget to create a sales forecast. Its accuracy is critical because all of the other budgets are derived from your sales budget. The marketing department needs to coordinate the development of the sales forecast, and our sales estimates frequently flow from the bottom up to the higher management levels. So that's what we are going to start with. So we're going to see our projected sales. This is what we are working with right now. So all we need to do is look at, all right, our cash sales were $100,000 in cash sales. So we are going to grow by 10%. That means in February, we take that 100,000 times 10%. So we can do that off to the side. And we find that to be 10,000. So our February cash sales are going to be $110,000. Taking that same exact approach, we find that 110,000 for the month of March, because we're growing another 10%. So that 110,000 times 0.1 or 10% is going to be 11,000. So that then gives us a total cash sales of $121,000. Now we have to do the exact same thing for our sales on account. So I'll move that up to the top, and we get 300,000 times 0.1, which you should find to be 30,000. So my sales on account in February are going to be 330,000. And then we do that same process again for 330,000 to figure out what our increase is going to be the next year. And we should find that we are growing 33,000 this year. When we add them together, we get a total of 363,000. So then to find our total sales budget, we just add those together. So 110,000 plus 330,000 gives me 440,000 is what we are estimating for February. And then when we add our 121,000 and our 363,000, we should end up with 484 for our total budgeted sales for March. So that takes us through part A. Part B, the company expects to collect 100% of its accounts receivable. So that would be those sales on account in the month following the sale. So if they made any sale they made in January, they're going to collect in February. Now, when we prepare this schedule, an actual accountant knows that actually collecting 100% of your sales isn't actually realistic. We know that in reality, we might be collecting these over a couple of months. So it might take the next, in reality, let's see if I can write this down. May take several months. or we might not collect it at all. Remember we had those allowance for doubtful accounts before? But when we're making this budget, we are just going to say we're going to collect 100% of the accounts receivable in the next month. So what we need to do down here is if we look at it and we see that, actually, I'm going to make this easier for you guys to understand. So we're going to erase this and we're going to put all of March's in blue. All right, so our current month's cash sales, when we look at our schedule of cash receipts, because that's what Part B wants us to do, prepare an expected schedule, a schedule of expected cash receipts for the first quarter. So they're asking us, how much are we actually going to bring in cash during these first 3 months? So we have our current month's cash sales. So that's 100,000 for January. That's 100 and, oops, that should be red. Sorry about that. 110,000 for February, and it's 121,000 for March. Okay. Now we are collecting 100% of the previous month's accounts receivable. So in January, since we started, we had 0 accounts receivable in December because we started in January. So now in February, we are going to collect everything that we had on an account receivable in January. So that means we are going to collect that 300,000 from January in our accounts receivable. And then in March, collect the previous months. So we are now going to collect February's accounts receivable. And then we're going to add all those up. So in February, we should have cash collections of 410,000, and March we should have 451,000 in our total cash collectibles. So now we're going to go on to Part C, using the information developed in A and B. Determine the amount of accounts receivable on March 31st for the pro forma balance sheet, and the amount of sales in the first quarter for the pro forma income statement. So when we look down here, we're going to see that our accounts receivable balance on March 31st. So here are my accounts receivable, right? Well, we collected the 300,000 in February, and then in March, we collected the 330,000. So what's left in our accounts receivable? Well, 363,000. That's what we should have in our accounts receivable because we collected all of the previous months. It's only what the current month had. And then our sales revenue on the first quarter pro forma income statement is simply just the sum of all the monthly sales. So for that one, we're going to take your 300,000 because that's what we had projected for sales for January. Oops, sorry, not 300. Should be 400 plus your 440 because that's what we project for February, plus your 484 because that's what we project for March. And when you add all of those up, you should end up with $1,324,000 because that's what our projected sales revenue will be during that first quarter. So Part A, again, will go on your balance sheet. And Part B that we put over here will go on that income statement. So those are two pieces of information that you need to create those pro forma financial statements. And that is your sales budget for demonstration problem 14.1.